Welcome to the crab pattern lesson. In this lesson, we are going to look at the harmonic structure known as the crab pattern. This pattern will draw some resemblance to the butterfly pattern you learned in the previous lesson. We will show you the structure and proper trading techniques. As we do with every pattern, we will show you the PRZ setup, and finally, we will take you step by step through a real market example. The crab pattern is considered an extension pattern, which is different from a retracement pattern. Retracement patterns use the X point as support and resistance and to help place stops. Extension patterns don't have this luxury. Stop losses are more subjective and potentially less reliable. Luckily for you, we have set stop losses in an exact spot. This pattern can sometimes be extremely volatile, especially when completing the pattern. So let's walk through the crab pattern setup. First, you have the bullish crab on the left and the bearish crab on the right. The first move we are looking for, just as always, is the X to A move. In a retracement move, this is a defining move, but in an extension pattern, it is no longer the defining move. We are then looking for the A to B setup. The A to B can be 382 to 618. As with the bat and Gartley, we are looking for specific spots here, which means that whatever we land on here on the retracement, we are initially looking for the bat to Gartley. So if we're looking at a 382 to 0.5 retracement, we would obviously be looking for the bat pattern, and if we're looking at a 618 retracement, initially we would probably be looking for the Gartley pattern. The next move, as with every one of them we've done so far, is a 382 to 886. This is just to set up the C to D leg. The C to D leg looks for a BC extension, an XA extension, and an alternate AB equals CD completion. The first move we're going to look at here is the BC extension. We're looking for a minimum of a 2.618 to 3.618. The extreme 2.618, 3.14, or 3.618 projection of the BC complements the XA extension. The XA extension looks for a 1.618 projection of the XA leg. This is the most critical aspect of the pattern and a defining level in the PRZ. We are then looking for an alternate AB equals CD completion. This is usually the top number or the highest number in the PRZ. The alternate 127 or 1.618 calculation are most commonly found in the PRZ. In fact, the 1.618 AB equals CD pattern is the most common alternate calculation utilized in this structure. However, this is the least important of the three numbers within the PRZ. So as I said earlier, the crab pattern, we're either looking for a failed bat pattern or a failed Gartley pattern. So once this Gartley or bat fails, we are then immediately looking for the BC projections and the X to A projection to see if we can get into a crab pattern. The PRZ is the defining moment in this pattern and will be a little bit different than what we've seen before. We will focus on the X to A and B to C projections. Again, we're looking for a 1.618 XA and a 2.618 to 3.618 BC projection. We'll look for the BC to complement the XA for the optimal area. Stops can be a little bit subjective, but since there's typically little structure with this pattern, we use the 2.0 X to A extension for our stop loss area. The ideal spot to get in this one is either at or just below the PRZ. The alternate AB equals CD pattern within the crab is the least important number in the PRZ. The combination of the 1.618 projection of the X to A leg and the extreme BC projection usually creates a distinct range for completion of the pattern. Because the crab pattern is so extreme and such an extended move, the price action is commonly most volatile in this pattern when compared to other patterns. This causes sharp reversals. Despite the typically severe reversals that we see, we focus on the pattern's completion and should examine the 1.618 XA projection. In most cases, it is best to wait for this to be tested. So let's walk through it. Typically, we see the price rally into the PRZ. Again, we are waiting for the 1.618 XA because this is the most important. Price would then come down, touch this level, maybe even go a little bit deeper, and then pop out. And then we are looking for targets. The targets we are looking for in this pattern are the same as we look for in every other pattern. We are looking for the 382 and the 618 of the A to D move. Let's take a look at a real market example here. First, we have a crab pattern sitting right in front of you. I'm going to give you a few seconds to look for it. Remember, we are looking for an extension pattern, so look for that C to D leg to be quite strong and quite long here. Okay, so let's outline this. First, I'm just going to look for the overall structure and then go back and look for proper Fibonacci ratios. I see the initial move down here, and then we have our A to B, it looks like, B to C right there, trying to figure out which one's a little bit lower, and then C to D up in this area, potentially this, or this. I'm not sure yet because I don't have my ratios outlined. Again, we would have to go from left to right because we don't have the luxury of seeing what's going to happen in the future. So this looks like an extended C to D move, which gives us the hope that it is an actual crab pattern. So let's go through this. First, we are looking for the XA retracement for the B point. So we get the XA move. B comes in at 618. Again, we're allowed to go from 382 to 618, so that lines up perfectly. We're then going to look for the D or the C point. I'm sorry. So A to B, looking for the retracement at the C point, goes all the way to the 886, which we are allowed to go 382 to 886, so that one's fine. And then we're going to start looking for extensions all the way to the D point. So let's go with the XA extension first because this is by far the most important. Okay, I messed that up a little bit. Okay, so the X8 extension, we're going to go up and then back down and make sure we go far enough over to hit actual price. Okay, so we see for this one we're looking for the 1.618 and we see it come up right up here at the top. So I'm going to label that right there. And then I can take that off. And then we're going to look for the BC projection here. So we get our BC up and then back down. And then we're looking for a 2.618 up to a 3.618. But you can see the 2.618 comes in perfectly right in this area. And then we're looking for an ABCD extension. So we are looking for all the way down here and then back up. This usually comes in at the 1.618, but you can see it's quite low, so we're just going to ignore it for this because it is irrelevant in this pattern. So we have a tight little confluence here of fib ratios, which means that as price rallies up, again, the top number is the most important number, the bottom number is the supplemental number. And then let's make sure we set our stops here. So we're using the 2.0 of the X to A move, and again, we can't see that, so we're gonna have to go up a little bit, so quite high here, and we'll use that as our stop. So we have those for our stops. We need to set targets here as well. Let's go back to auto. So we have the A to D retracement, and we are looking for 382 and the 618. So there's our 382 first target, and then our 618 second target here. Okay, so let's look at this. And then I'm going to scroll back up here so we can actually see everything. You won't be able to see the bottom of the pattern because well, you maybe see it a little bit, but the stop is so high. Okay, so we see price, we're going left to right here. Price moves all the way up into the D point. We see an initial test of the, looks like the BC projection here. Again, we usually wait for the XA because the XA being the most important. So initially I would not do it right there. I'd wait for it, and then you see a price bar right here, and I'll zoom in a little bit. You can see that the wick penetrates the BC and the X to A. With this one, we can't be as patient with price action because price is usually so volatile that it'll rally right into it and then pop right back out of it because we're so overextended and so many people are long in this position that when they start cashing it out, then they have to flip their position and go short. So it usually is pretty quick movement here. So you see that we just put a little pin bar right through both levels. That makes me want to take a long position. So I take a long at the close of that bar. Okay, so this is on the 4 hour. Again, we could drop down to the 1 hour and look for price action, which would be a little less volatile there. But again, that's what I would recommend. You drop down and look for some price action. But since on the 4 hour, we put a little pin bar through it, I'm taking it. Let's say that I waited on that one and I'm taking it right there at the end of that, or at the close of that bar. Okay, so let's look and make sure that we have proper risk reward here. So we're going to put it just a flick above it, and then we are going to look right there. Okay, so the first target is 1.3 to 1, and let's move that back. And then the second target we are looking at around, looks like 2.19 to 1. So we have good risk reward ratios here. Again, anything over 1 to 1 I will usually consider taking because harmonics use such a high probability setup that usually you're going to win anywhere from 50, 60, 70. Heck, they even say some patterns are 90% probable. I've never seen somebody trade harmonics 90% of the time, or 90% probable, but a safe bet is to say that you're going to be between 60 to 70%, which if we have equal 1 to 1, then we're definitely profitable traders. So we're looking for that rally back up into, and then you see right after we took it, we fell. I mean, we hit both targets within 8 hours, and that was quick. That's easy money. And sometimes, especially with this pattern, you will see a quick move down and you'll hit those targets quick. So that's not all that uncommon. We're so stretched right there. The one thing about this pattern you'll see is that we have no structure sitting here to the left. With a retracement pattern, again, say you took an initial position right here. You have this structure right here that acts as support and resistance, so we always place our stops above. On this pattern, we have none of that structure. So we can look a little bit to the left, and I'll go right here and zoom out a little bit. And then you can actually see we do have a touch of structure right here. So you can see this was the previous high right there. We do go up above it and we closed above it, but price was unable to maintain it. But that acted as a little bit of structure. So that just gives us a little bit of extra confidence in that. And if you had taken the BC, the initial one for the BC, so just below this, I mean, you were getting in right here, you would have never been stopped out. You would have been probably spending a day or so in the negative, and then you would have fell off. So either way, it would have worked out for you. Doesn't always work out like that, okay, because it's so extreme and so volatile that we could actually just burst right up through it. So that's the thing you have to consider about when you put the bat pattern, or you put the crab pattern into your portfolio. Is this a pattern that I want to trade? And you have to be careful about that. Do I want to take extreme price action into my portfolio? And some of you would say yes, and some of you are like, no, I want to trade more consistent patterns, or patterns that I can use the X point as a place for potential support or resistance. After seeing the real market example, let's examine the key points here. The first one, and most critical of all, is the critical aspect is the tight potential reversal zone created by the 1.618 of the X to A and the extreme 2.618 to 3.618 of the BC. Again, the X to A is the most important part here. We do have an alternate AB equals CD pattern within this, but it is the least important of all three of the numbers that we are looking for. Finally, we are looking for failed Gartleys and failed bats that turn into crab patterns. So if we get a B retracement of 50%, then it's obviously going to be a failed bat. And if we get a B retracement of 618, then we're looking for a failed Gartley. Either way, we're looking for these failed patterns to turn into a potential crab pattern.